If you were to invest in one EV company, which would you pick, Rivian or Tesla? Early investors of Tesla became millionaires and billionaires, and Rivian stock is currently down by over 90% from its all-time high. However, analysts speculate that Tesla is also on a downward trajectory, and it's mainly because of Elon Musk's involvement in politics. On the other hand, Rivian has secured huge partnership deals with giants like Amazon and Volkswagen, and many believe that this positions Rivian for strong growth. So, which do you think among the two is likely to outperform the market? Hi, my name is Rick Orford, and I help investors like you make informed decisions with your money. While I'm not a financial advisor, I have been trading stocks and options since 1999. And that means I've seen corrections, bear markets, recessions, and pretty much everything in between. And if experience has taught me anything, it's that growth investing can work well when you focus on quality companies during temporary pullbacks, kind of like the recent downturn in EV stocks. By the way, I want to thank the Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insights and stock recommendations for investors of all skill sets and risk levels. And y'all know how much I love researching new stocks and finding the next best investment. So I'm proud to partner with the Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 5 times, and you can scan this QR code or visit fool.com/RickO to get your 10 stock picks right now. Okay, so pretty much everyone knows Tesla. The company was founded in 2003 and later became the world's most valuable car company under Elon Musk's leadership. Tesla's EV lineup includes the Model 3 sedan, the premium Model S, and of course the most controversial one, the Tesla Cybertruck. Tesla also ventured into the energy storage space and built a supercharger network across the United States. Rivian, on the other hand, was founded in 2009 and went public in 2021, so it's relatively newer than Tesla. Rivian's focus is primarily on consumers and commercial markets. For its consumer segment, Rivian offers premium adventure electric vehicles like the R1T, which is an electric pickup truck, and the R1S, which is an electric SUV. Now, I'm not entirely sure how these EVs would perform in rugged terrains, but the fact that Rivian's EVs are selling out speaks a lot about them. Rivian has also another advantage that Tesla didn't have in its early days, which is a presence in the commercial sector. Right now, Rivian's electric delivery vans, or EDVs, and its Fleet OS management platform are being used by companies in the United States, and one of its largest clients is Amazon. In fact, you've probably seen one of these blue vans delivering your Amazon packages. Now, let's talk about the company's financials. And I need you to really pay attention to this one because these numbers paint a picture of Rivian and Tesla's current situations. Let's start with Tesla's most recent financials, which is for the first quarter of 2025. Tesla's overall revenue declined by 9% year over year to around $19.3 billion, while its operating income also decreased by 66% to around $400 million. And the most alarming number is that Tesla's net income decreased 71% to just $409 million. It's also worth noting that sales in Tesla's main source of revenue, its car manufacturing segment, declined 20% from the same quarter last year. Although some of its segments increased margins, those are really insufficient to cover the primary segment's decline. I think these numbers alone will give you a good idea about Tesla's current situation. By the way, the data used in this analysis is powered by bar chart, which lets you screen and filter thousands of tickers by price, volume, sector, and more. So you can find data on pretty much any company in seconds. You can scan this QR code or click the link in the description to create your free account. Okay, so let's have a look at Rivian's finances. For the fourth quarter of 2024, Rivian's revenue increased 31% year over year to $1.73 billion. Although Rivian reported an operating net loss, there's also a silver lining. The operating loss for the quarter decreased to around $660 million, from over $1.6 billion in the same quarter last year. Also, its net loss decreased from $1.5 billion to $740 million. And these numbers are very similar when you look at them on an annual basis. I mean, Rivian is still burning cash, yes, but I think it's moving in a more promising direction compared to Tesla, considering the recent financials alone. Okay, so let's imagine for a moment that financials aren't the whole picture. At the time of the recording, Tesla stock is trading around $286 a share, which is down over 41% from its 52-week high of around $488. And the stock has experienced some significant volatility. Although some of these wild swings are caused by macroeconomic factors, such as Trump's new policies that affect pretty much every stock in the market, Tesla's poor financials, increasing competition, and Elon's involvement in politics are also reasons for this downward trajectory. Another strange aspect about Tesla is its valuation, or its price-to-earnings ratio. The PE ratio is calculated by dividing the stock price by its earnings per share, and that results in how much investors are willing to pay for each dollar of a company's earnings. For Tesla, is trading over 154 times trailing 12-month earnings, and that's nearly 7 times the S&P 500 technology sector average of 23. And for a better comparison, more established companies like Microsoft, Meta, and Apple, well, they trade between a 17 and 27 multiple. Even Nvidia trades around a 38% multiple, which is still significantly lower than Tesla. And then if we look at Rivian stock, well, that one has been beaten almost to death. The stock currently trades at around $13 per share and is down around 90% from its all-time highs. Okay, so with that out of the way, let's look at some advantages and challenges of owning Rivian and Tesla. Arguably, Tesla's biggest advantages include widespread brand recognition, an overall head start, an established supercharger network, and Elon Musk himself, a huge portion of shareholders invested in the company because they believe in Elon Musk. However, the company is also facing various challenges, such as declining revenue, increased competition, and ironically, Elon Musk. Since Elon's involvement with the government, reports about protesters targeting Tesla showrooms have been quite common, and that has led to some pretty extreme situations. Now, I don't intend to dive deeper on this topic, but the point is, Tesla stock has been moving more based on people's feelings and the news rather than tangible fundamentals. So this shift in public perception alone would negatively impact the company's revenue. Another irony is that the Trump administration's aggressive tariff policies are threatening Tesla. Although the company primarily sells and manufactures cars domestically, Tesla sources most of its materials from China, Mexico, and Canada, and elsewhere. So that's it for Tesla. Now let's talk about Rivian, because Rivian's situation isn't very different. Rivian also manufactures and sells its high-priced EVs domestically, but sources some of its car-building components from outside the States, which means it'll also likely be affected with Trump's policies as well. However, Rivian partnered with industry giants like Amazon and Volkswagen. Amazon alone ordered 100,000 delivery vans through 2030, which gives the company a predictable cash flow that most startup companies can only dream of. Rivian also inked a $5.8 billion partnership deal with Volkswagen, which further extends the growth runway of this company. Now, if these partnerships go well, what's stopping other companies from getting a deal with Rivian? But of course, Rivian has its own set of challenges. For example, the consumer segment in the United States, which now measures how confident people feel about spending money, is at historically low levels. And Rivian's EV prices, which start at over $70,000, means it's not going to be an easy sell no matter how cool Rivian's trucks look. That said, Rivian is expected to roll out its R2 SUVs in early 2026 with a starting price of just $45,000, which should increase Rivian's customer base. It's a less expensive product, so it'll likely sell out faster than its R1 series. So now's the million-dollar question. Which stock should you buy? I think that if you're a conservative investor like me who wants stability and proven performance, neither company is ideal for you right now. But if you have a long time horizon and a high risk tolerance, well, I think Rivian offers the more compelling case. So that's my take on Rivian and Tesla. But what do you think about these companies? Are you an investor in any one of them? And if not, why? Let me know in the comments below. And of course, if you found this analysis helpful, don't forget to hit that like and subscribe button for more investment analysis. Thanks so much for watching, and I'll see you next time.